Hello traders, Gary Wagner here just after 11 o'clock in Honolulu, 5 o'clock in New York. It is Wednesday, 5th day of June 2019, and this is the daily report for gold and silver. Although gold is trading up moderately, up about $6 on the day, it is the intraday high which challenged the yearly apex at about $13.50 that is most interesting. We'll talk about that in detail as we look at some charts in our technical studies, but the recent statements by the Federal Reserve has really put a spotlight on interest rate cuts. Of course, the next FOMC meeting will occur in July, and then at the end of this month is the G20 meeting in Osaka, Japan. Those two events really will shape the economic fabric and outlook throughout the remainder of the year. Also, they are meeting in Washington right now, and as it stands, tariffs of 5% are ready to be initiated on the 10th, on Monday of next week, and that should also have a dramatic effect on the economy. Let's take a look at our current pricing. Traders, an interesting mix in the precious metals markets today, with gold and silver trading higher and platinum and palladium trading lower. Gold is currently up $6 at $1334.70, but is the high that is of most interest, which came in at $1348.90, just shy of the record high that was achieved earlier this year. On a closing basis, however, we're looking at 34, and the record high still remains at $1347. Silver also gained, but gained nominally about 0.2%, and after trading to a high just above $15 today at $15.04, we are currently at $14.79.5, a 3-cent gain on the day. The largest percentage drawdown occurred in platinum, down $15 at $804.10, and palladium was down almost a full percentage point, 0.93 or 0.9% at $1328.30. We are playing whipsaw with the most expensive precious metal, changing hands. Yesterday, it was once again palladium. The day before, it was gold. And today, it is once again gold. What we are seeing is gold gaining value and palladium trading under pressure. That is a trend that I do believe over time will continue. However, one day to the next is anybody's guess. Traders, let's take a look at our current technical studies. We definitely had a most interesting trading day. Traders, I want to begin today's show by looking at our daily chart, this of August gold futures, and it is the intraday high that has drawn the most attention to the range today. I am now circling that candle. It's very much a shooting star. A shooting star is simply defined as after a uptrend in the market. We certainly meet that criteria. We have a day in which we have a very, very small body. The body is simply the price differential between the open and close, and a tail or upper wick that is at minimum 3 times as long as the real body of the candle, and we've met all of that criteria. Now, this without a confirming candle tomorrow is just an interesting day. We'll have to see if we get follow through, but the market did close on solid ground, gaining about $6 on the day, currently at $1334.70. Yesterday, we moved our stops up to 21.13, 13.21, and we are currently long from 12.93. With today's move, there is not a logical place to trail that stop up to that it has any real strength in it in terms of the numbers, because we would have to really look to move it up to about 13.25. Our stop's at 13.21. That's a $4 differential. My sense is that we could be looking at some sort of an exhaustion pattern with the shooting star and possibly lower pricing. However, I believe that over the last couple of days, and even though we were long, I was moving the protective stop up tighter and tighter to guard against that, or to really lock in any kind of profits I could from our current trade, because they are definitely fairly sizable. However, I have been fooled in both occasions. We did get a consolidating candle yesterday. That was this doji right here. But then today's was really a part and parcel reflection of earlier dollar weakness and then a return to dollar strength. The dollar is currently trading up about 0.3%. Last print on it is 97.29, but it did hit a low today of 96.65. And if we look at the dollar index, I'll go ahead and pull that up. Remember this shooting star here. What we're going to see is really the opposite occurring in the dollar index. This, of course, is a daily chart. And what we have here is a hammer. A hammer being defined as after a defined downtrend, you get a lower wick, which should be 3 times the length of the real body. Now, this real body is a little bit bigger than you want to typically see for a hammer, but nonetheless, that is a kind of candlestick we would have to identify that as. And what is most interesting is we did get a variation off of the Three River Evening Star, and that occurred about a week ago right here. That's these 3 candles. We then followed that up by lower pricing on Monday, lower pricing yesterday, and then a pretty strong reversal in the marketplace today. So, all things being equal, we are currently sitting with some moderate gains in gold. We'll go back to that chart, 1334.70. We're long from 1293. We do have a stop in place about $10 below this. We have to account for any kind of range, but the key, any way we want to look at it, whether the market's exhausting or simply consolidating before moving higher, is that all week we have had really what we want to see in a market moving higher, which is that you get a higher low and a higher high than the previous day. Yesterday, we certainly got a higher low and we got a slightly higher high by about 20 cents. And then today, absolutely a higher low and a much higher high. However, what is most interesting is the fact that we saw gold pricing stall at 1349 because that is the former record. Now, in terms of a closing basis, you have to go back to February and we had a close of 1347. So we are still off of that by quite a distance. And the question is whether or not it will make a stab for those highs and take those highs out on a closing basis, because on an intraday basis, we came close to but not above the high achieved in February of this year. Traders, my recommendation is to maintain your current long position, to maintain your current stop. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the next daily update and review. Have a great day. Bye-bye.